on this voice, or do we go on the YouTube one? Oh, okay, cool.
Pick this one up. All right, I think it's picking me up now. Yeah. Oh, I love OBS Studio.
Sweet.
All right, so I got y'all here, and we're here. We should have saved everything we just said prior to this for this, because we actually covered banks and financial, or
The
BA and financials.
yeah, that's all good. We can talk about it. I'm sure we come up with some other stuff.
I like that all of us focus on different stuff too. I was just telling people that in stream today. Like you can come over to my channel and you'll see a mix of airlines and then a lot of tech and then some other aggressive stocks that are weird like Beyond, McDonald's, Coca-Cola, BA. And then you go over to Chef's channel and you'll see all the financials, another mix of airlines, and you really get a good mix of pretty much everything that's like moving, very important, just by going to those
Yeah, for
two.
sure. Yeah, for sure. And that's how you can grab all kinds of perspectives, too. And the thing about it is it's not just perspective, but it's the levels that they're all kind of similar. Even if we're off by like 30 cents, they're still similar levels and they're still major levels, and it's still the same type of strategy that we're all using.
Yeah, I always have a few people hit me saying like, "I'm so glad that the price action between you and Chefs is not much different." I'm like, "Yeah, it's pretty much when you go to Chefs, you're just zooming out mine. It's just price action on a bigger time frame, and it's really good looking."
Yeah. And
Yeah,
what I learned too is really important is like, everybody always tries to play like, stocks off your watch list or if chef's calling them out or whatever. But what I found helped me a lot was just creating like my own list of tickers that I'm gonna watch and be like, all right, I'm not playing anything that's not on this list. Like I'm gonna understand how these tickers move and I'm just gonna play them. Like when the setup plays out, my alert's gonna go off and I'm gonna get in.
And that's a very important lesson to learn because a lot of people, everyone's different, so everyone's going to be more comfortable with different stocks and different sectors. Like I know so many people that can't trade Beyond or just hate trading Beyond just because they don't like the price action or the option chain, but it's one of my favorites for some reason just because it's some weirdo. It's like a weirdo stock. It doesn't move with the rest of the market.
Well, too,
it
especially
doesn't
with
either.
like I've talked to a lot of people that have like smaller accounts and they're like, "Oh, I'm trying to play like I don't know, like Beyond or something." And it's like, bro, an at the money contract for Beyond like a week out is like $600. Like if you're gonna play that with your account size, you're gonna have to go like way out the money, and then like it's not even worth it
Yeah, and then it's
unless
not
you're
even worth it
swinging it
because
or
your
something.
contract's weak.
Yeah.
You need to move $10 just to make you $10, something like that.
Yeah, basically. And that's something that I always talk about too, right? Is something that Nick just said, right? If it doesn't match your account, then why even look at it? There's no point, to look at a stock or to even look at the contracts if it does not match your account. If you got a, $5 account, you're not gonna go and trade BA or Facebook that have the in the money contracts worth your account.
Lost
There's
so
just
much
no
money
way.
trying to play BA with my small account.
Yeah, and you can't
And
play
there's
those
tons of
tickers.
stocks on the market too. I always tell people like check out bar chart and then check out this channel and you could see like all the tickers that are small cap that have good options chains to day trade with. You got AMD, AL, DAL, Square, Snap. You got a bunch of stocks. Twitter, PayPal, I can go on forever. There's a bunch of good options chains with cheaper chains, so you're not having to risk half your account just to play one day trade.
No,
Exactly.
definitely.
And then
Definitely.
as you grow, you'll start growing into those more aggressive stocks too. You'll get more comfortable with them, so it won't be so bad when you're having to weigh in more money that you're not so used to using before.
Yeah. And that's exactly like how I started trading, right? So Microsoft was one of the first ones that I actually learned how to trade price action. And at that time I was learning how to use the VWAP at the same time. But at that time when I was learning the strategy that I'm currently now is I had all my indicators up. And as I learned how to trade price action, I slowly started taking off one indicator at a time. And then at that point, because it matched my account. The contracts were only like $100 back in the day when it was a little bit cheaper, and I was able to trade those. and I wouldn't lose that much. I'd probably stop out at like 20, $20 to $30 a contract, which was not bad to my account. But my gains were like $70 to $80 a day. But that's how I ended up learning because of my account, and Microsoft is just like a nice price action stock.
Yeah, and a heavy part of the Q's SPY. It's got good
Hmm.
weight to it too, which is another aspect a lot of people should start working on too. Is when you go trade like the Q's, you got to expect the most aggressive stocks. When you go to trade the Dow, you're gonna get a good mix of stocks. Same thing with SPY. You're getting a good conglomerate of something. So it's good to learn, the different stocks within each sector, or at least the heaviest
Yeah,
ones, so you can start honing in on it all.
yeah,
Yeah. I miss back when I first started trading and Microsoft was like you were saying like $100 to $200 for at the money. Uh, but I mean, even if like if some of those stocks or even if like Apple, I don't know what Apple contracts are like since the split, but you can play XLK and that's like really close to what a lot of those contracts are. Because I mean, that's probably most of the those stocks are the most weighted in XLK, the technology ETF.
it's technology. You can also trade XLF. XLF is the financial sector, and this is kind of something that I personally wanted to talk about with you guys. And XLF is actually like a kind of like the SPY, right? So if you're looking at a SPY, you're looking at the all the other S&P 500 stocks, but when you're looking at XLF, you're looking at the same thing. You're looking at all the financials, and and something that's been going on with COVID, right? A lot of the news, a lot of the Fed talks is basically affecting financials right now, and it's making it go up and down, and the awesome part about it is that it on a long-term level perspective for any investor, these banks are not going anywhere.
Oh, definitely
It's
not.
just like it's just like McDonald's. McDonald's is not going anywhere anytime soon, even though they're coming out with like new restaurants and this new Beyond thing. McDonald's not going anywhere. It's that simple, and it's the same for JPM. So the reason I have JPM is the fact that it still has uh, a big recovery basically, and if we're already in it, if we're in these leaps already, our risk is not too much. So once it starts going under $90, then maybe I'll probably buy more around that time. But as of right now, from like this $100 level all
Hmm.
the way to the high of 145, that's a pretty big move. All within like, hoping that whoever's in this leap with us, like we bank on this. Like that's what I'm willing to risk right there.
This actually looks like a good dip spot. I'm looking at JPM on the weekly. A good dip spot for the continued run up. I like the trend it's holding.
Yeah, it's a very very nice trend. So yeah, if you show your weekly, it's literally right there at the dip. This is like the red week that it's gonna have.
Hmm.
So I think the lowest that I would want to grab it would be around the 97.
97.
Yeah,
Oh, I see
97.
what you're
Either
saying.
way, yeah. So either way, I still like this $100 level. I like the fact that it's here and that earnings is coming up in October. So even if we do drop, let's just say we drop down to like the bottom of this channel. So this is the one I'm talking about, the 90 level, right? So the 90 level is, if you look at the weekly and it creates that downtrend. Well, it's cool because at least we'll be coming down with ES. We'll be coming down with the market, and this is how you prepare basically for the coming days if we're gonna be bearish, because we still don't know, even though we got these huge bearish candles right at the top, and like we were talking about earlier, there's still a lot of support down at the bottom, and there's still room to go up. There's still room to base out. There's still room to create patterns in order to break to the upside or the bottom, whichever way. But this at least gives you a perspective as to where JPM is going to be at the low of like 90. And if we run down all the way to that level for earnings, then I'm definitely going to add into my lead call. And as soon as I get in here, I'm going to average, and then I'm going to look forward to everything that happens after that. Basically, I want to see it just come recover. We're gonna get all this news from like the COVID that we have the vaccines. Like all that stuff is gonna happen, and you have to understand that even if Trump gets elected around, whatever time he's gonna get elected, I'm not a politician or any of that. I don't care, man. I
I don't
just
even
see
think they
red
know
and
the date anymore.
dude, all I see is red and green candles.
Yeah, whenever I drive
And
by Home Depot, I see
that's
HD.
yeah, yeah, man. And the goal is just to get prepared for these things, man. And I honestly think that these financials, once everything starts clearing up and people start going back to work and all these things, man, it is gonna entail all that, and it's gonna build the eye of the investor, and the eye of the investor is gonna find that this is at a great buy, and that's why we're in these leaps, because we know that it has value to just keep pushing up.
Another good thing
And
that
it's
I was looking through all the banks when you were talking. I'm looking at a lot of them, especially XLF and JPM in the bank sector. They're not even back above June levels yet, so you actually have really good upside potential, or probability, I should say, to reach these 26 levels again on XLF, which will increase all those
yeah,
banks you're talking about heavily.
yeah, GS, BAC,
Which I think the
C.
break of this 2630s after your dip week this week, I think once that happens, you'll have a shift in momentum too,
Yeah,
because you'll
and
be at
and,
new
and that's
levels.
kind of yeah, and that's kind of like what kind of we've been seeing the past few days, right? So because tech technically pulled back, this is a pullback. This is not a start of a recession
Hmm.
or anything like that. So whoever's talking about recession, you
Chill
know,
out.
make sure chill out, relax, and if you're in a recession, well, show me your position. It's that simple. Let your position reflect your mouth, right? And the thing I like about C, the ticker C, is the fact that and if you look at the weekly, if you
Hmm.
like pop up that weekly, it's freaking gorgeous.
All right, I'm on it.
All right, that's dope, right? So if you see right, that 53.50 all the way down to this like 49.
Yeah, that nice
Beautiful
consolidation.
range.
Oh, wow, I found it like instantly.
Beautiful range, man. This is the bigger time frame. This is why I always talk about that my favorite setup is the range breakout. I don't care where it goes as long as I'm in it.
Yeah, because
Yeah.
that consolidation leads to bigger moves. This
Yeah,
is
like
so much
Exactly.
consolidation right here. I got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks in a row just sitting in between that zone you're talking about.
that was
That's a lot of
uh,
weeks.
on AMD
Yeah.
when AMD was consolidating for like a couple months and then
Oh,
it just
dude, I
popped.
remember that.
I know
Yep,
me and James were watching that for the longest time,
right
and I
here.
think I played it, but I only played it for like a couple dollars. And I was and Chef was explaining to me like when you get those range breaks, they can be such an explosive move that like that should have been a swing because like it pops off like it's like a coiling spring in that range, and it's just building up that energy. And when it does pop and choose a direction, we got that. What was it like 50% move on AMD?
Damn, you know what's cool?
Yeah.
I'm looking at C since you brought it up. All I did was extend that left line, or the bottom line over to the left, and it actually catches as a support that was months before the COVID fall. It was actually to the last run up before COVID fall. So it's a super strong level that it's consolidating on top of.
Yeah.
That's nuts, dude. That's crazy to look at that kind of stuff.
Yeah. And just like I tell Nick all the time that the minute you break out of a range, the best way to trade it, whether on a small time frame or a big time frame, the rule that I'm about to tell you, you better take notes, you better write it down. Grab two contracts. I don't care if it's 10, 20, 30, 50, whatever. Okay, the point of it is how you're going to trade it. So the first one, the minute you enter, you grab those two contracts in the money, get 2 weeks, 3 weeks out, however your account is. Never grab out the money. Okay, especially for these breakouts. When you grab the in the money, let's say we're breaking already out at the 53.50, you want to grab the 53 because at least you're in the money 50 cents already. Okay, especially for C, the contracts are not as heavy. So you're probably only putting like 500 bucks maybe, if that, for two contracts. Now the
That makes
first and then the first time you break out and it's a breakout with volume, you're gonna come get that retest. So it gives you that leeway. So you're already on a 50 cent leeway. Okay, so from 53 to 53.50, that's your little area, that's your zone. That's where you're gonna enter your breakout and you're gonna stop out below the 53.50. I mean the 53, right? So when you bring it up, you let that thing go all day long. Okay, the minute you scale out towards maybe like lunchtime, because lunchtime all the volume dies down, you take profit at the next area. So the size of this range, right? It's from 49 to 53.50, right? How much is that? That's like a $3 move, right? So it's a $3 range. So you're gonna expect the range to do double the amount on the breakout. So you're not gonna go from 53 to 56. You're gonna go to 59. That's gonna be your target. So understanding the range, the levels of the range is gonna give you the level of the breakout. So the two contracts that you just had, you're already in profit. You're already like at 100% or however much it goes. And then at the end of the day, you swing the other one, you let it go because all you're risking is maybe 50% of the profits that you already have. And then that's how you trade those breakouts and you just let that thing go. And having time on it makes more sense,
Playing with the
especially
tables
for
money as you
this.
scale out.
Exactly. That's exactly how I always tell these guys to play these ranges, and that's exactly how I play them. People always ask me, "Hey, did you get out?" Well, why should I? If there's more green than red, why should I get out? And
Exactly.
vice versa.
My plan's not over with. I'm not getting out yet.
Yeah, I have a target, I have a plan, I have a stop loss, and I have a trail stop. It's that simple. It's all a matter of understanding what the breakout is doing, how much it's going to move, and how much you prepared yourself mentally to be able to handle this type of movement because the IV is going to shoot up the minute it starts to break out. And that is what you want. Everybody says sell into strength. Yes, I agree. But sell into strength when it hits your target. Don't just sell on the first like 3 minute candles that you see that once you're in the green, you're like, oh, it's into strength, there's volume. Like, no, wait till it breaks, wait till you understand the pattern of the move, and then take that as a winning trade. That makes sense?
Yeah. So how
Definitely.
do you like? Because I feel like one of my problems is when I'm playing like a range break or even just like a break above, uh, like I'll get faked out or I won't know when it's actually, gonna run. Like C broke out, what is this? 8:10, 8:11. It had that
Mm-hmm.
little break, temporary break of the range. It's like, well, how do you tell if that's gonna be the day when it's gonna run to that 59 mark, or if that's the day where it's just gonna pop up and pop back down into the range?
Okay, the first question you should always ask yourself is how did we get to that breakout point?
Yeah.
Because if you look at that, if you go on the 4 hour time frame, we actually started running from the second from when I called the bottom right here, and then we started trading financials. And I think Leo was in with me on GS at that time as well. He was in here with me, and then that's when I traded this breakout as well, and I swung it. I swung C right here. But again, the move was already big,
Yeah.
so we already went from the bottom to the top of the range. So that's why it wasn't as heavy.
Which
Now,
I see
if
another
we
good
come
thing
up,
too is on the daily. You had sellers, so I know a good tip Holy Fire always gives out is like she likes to buy at the end of the day, so you get a for sure, of what the daily candle is gonna look like when the day's over. And he actually had sellers on both days, so I remember Chef did catch that day though because it did push up early on, so I remember you called gains out on that. But it
yeah,
actually for a swing though, I would have been looking into day two because it actually didn't have like amazing confirmation of breakout. It did pop out of the level, but it's not always going to be pretty. That's why checking
yeah,
volume in your
exactly,
price action is helpful too. I
right.
think even on the four
Just under,
hour it did it too.
yeah, just understanding like all the basic principles on it, because the breakout basically was already on top, and then it came down and retested that same day. So it technically kind of was like a red day.
Yeah, I think the movement was from pre-market. You had from
Yeah,
53 to 55 from pre-market to high of day, and then after that it was the last 4 hours was red volume.
Right. Yeah, so a lot of, there's a lot of factors when it comes into, trading those breakouts, especially on smaller time frames. Smaller time frames will give you, a little bit of volume some days. Some days it breaks out and there's like legitimately no volume, but then all of a sudden the volume comes in and next thing you know it pumps up real fast and then it comes down all the drops all the way to the retest and it just keeps dropping.
Yeah, I think that was my problem when I was trading Cisco last week. Like we had
Mm,
that top of the range and we had some nice volume on that first initial break, but I mean it was just kind of dying volume the rest of the day. And that's kind of why I ended up cutting that. Um, and then yeah, the next day we sold off back to the bottom of the range, ended up breaking below it.
yeah. And then also, man, like a lot of a lot of tickers, they're not all the same. They don't all react the same to upgrades, to news, to the market catalyst. They don't all react the same. Every ticker is different. Every ticker has its own characteristics and its ATR movement. So that's something also to take into consideration when taking these breakout plays or these momentum plays or these upgrade plays, things like that, like Beyond today. Um, something that we were talking about earlier was Beyond was at a weekly support, so it opened at a weekly support, but yet it got that news and it pumped up and it hit every level that was posted in the chat. And same with BA. BA was BA has been a stock that we've all been following. We've all known that it's been squeezing, that it goes up and down like crazy. And every time it gets like a good news, it goes down. Every time it gets bad news, it goes
It goes
up.
up.
And it's weird, right? Today we got some news on it. Was it bad news? Good
It was
news?
bad news, and it actually ended up
Okay.
falling. So that was the weird part.
And and it broke a major weekly support. So like characteristics of a stock, they change, they're different, they're unique. Not every stock is gonna have the same type of play.
Yeah, and it's another reason why like I like that I've just been playing tickers off my watch list because it's like especially like these are kind of smaller caps and like you kind of start to understand like how they move, like how you were explaining when I was playing KO, how it had like it already had a big move, so that's why you weren't expecting a breakout, and like just kind of understanding how it's different than it's like a lot of the tech tickers that a lot of people play, because like something like AMD, Microsoft, or Apple or something could move like that where it just keep breaking through these levels and running, but a smaller ticker like KO that's kind of more of a safer stock isn't going to run 10% in a day.
Exactly. Exactly.
Which is why I think me and Chef preach buying time is the most important thing you can do when purchasing a swing. It's okay if you're paying a little extra premium for that swing contract for more time, because that time gives you more time to make a decision. Really, it's giving you
Yeah.
more strength with your emotions and trading, and the psychology factor of it. So it really does help you stay in there. It does help you to look at the delta, theta, open interest, volume, but as long as you are buying time, because what we're purchasing are time decaying assets. So we're pretty much purchasing time and betting on something to go up or down. So as long as you buy time, you have time to make a better decision, at least more rational decision in an irrational situation. So you're not having to freak out
Right.
every time.
Yeah, that's helped me a lot too. I started buying like, I used to just play weeklies and even up to like Fridays I'd play 0 DTE on tickers. But it's like, now I'm starting to buy like at least a week out, if not 2 weeks. And especially, with a smaller account playing these smaller tickers where I can buy time and, you know, get the contract that I want, get an at the money contract with time on it, it's gives you that edge to where if you wouldn't be able to do that if you're playing a ticker like BA or something like that that has a lot more expensive contracts with a smaller account. You can't buy as much time at the money.
Right.
Big time. But
Bitter.
that
So what do you think? What do you let's talk about the market, man. Where do you think we're gonna head tomorrow? What is your thought process?
Where did we close?
Um, so if we're talking, all right, so let's talk tech first, since I guess overall, yeah. Tech, I have a good feeling because if people would just chill the hell out, which is why I keep saying that, if you just run a simple Fibonacci from the bottom of this COVID fall, not even going to other previous levels, to the top, running that fib there, we're barely going through the 23.6%. An average drop normally goes to the 50, 61.8, and 78.6. These are high probability retracements. So seeing it go back to this 50% retracement would not actually freak me out because this is a normal retracement. Normally when you have a big breakout, you go back to your levels where you actually broke out from. I wouldn't call any of this bullish breakout until this level right here was broken, which not even doing that information in the Fibonacci gives me that 50% retracement right on that line. They're the same line. That's how accurate that
Yeah,
is.
that's
So,
See, you think the Qs test the previous all-time highs yet?
um,
mm,
no, not even close.
no,
You
no.
don't
It
think we're gonna
actually
get that
just
big of a drop?
Oh no, you're asking me? I thought you were asking if it did or not.
No.
I would think best case, or I say best case because of trends, but best case, I would say we do retrace to the 50% if we are looking at a continued, bearish outlook for September, which is a historically bearish month. So people also need to realize
yes,
that this isn't normally a bullish month.
Yeah,
I
we
think
also have
I think it was
election too.
19 out of the last 20 have been red or something. So this
The
has always been a
election
pretty bad month.
play a role.
Tech's a
yeah.
different story
History,
though, because this is the one that led us. This is the one that's gonna make us bleed. But I like what Chef was talking about when we were talking about SPY. We're talking about XLF. We're talking about airlines. All of these stocks are still under June levels. All of these stocks are still under the pre-COVID levels. So no matter what, if we fall on the tech sector, if we rise on the rest of the laggards, it doesn't matter because we have previous price history. We actually have information now on all these stocks. Like when I go to Apple, I have information here now to go off of for when we go down. Before, you didn't really have that because you were just flying. When you're flying up, it's a little different. You're just playing the psychological factor of how the market's going to react. So I think it's kind of cool to actually draw these retracements and see, what's what. Where can we actually go? Where's a realistic number to go to over a long period of time? Because this rapid market is not a normal thing. I've even seen investors who are 20, 30 years into this tell me personally that this was different than the tech bubble. This was different than the tech bust because there's a lot more investors out there. There's a lot more people with fractional shares. There's new investors just like us who are getting into day trading,
right?
options trading, all that stuff. It's a different ball game than it was. So you're going to see more aggression, and people are liking the volatility. The volatility is probably the favorite part for a lot of options traders right now, that's how it
Yes, it
should be.
is.
But that's why you're seeing such aggressive moves in these sectors. It doesn't even matter what sector we're talking about. It's going to be aggressive because of the new ball game that we're stepping into.
Yeah, and I like that, man. I think volatility is like one of the best things because a lot of people don't know how to trade it, and a lot of people get faked out, right? And one of the tips that I like to give is understand the ATR of a stock,
Mhm.
and when there's volatility, it's gonna be double that. It's always gonna be double. And like I said, not every ticker will act the same. Some ticker will do triple, some tickers will do 1.5, some tickers will do four, 4 times the ATR movement. And that's something to take into consideration, especially like, if you look at Microsoft, Microsoft's ATR is about 250. Today it moved a little over $5. That's double the amount.
So how do you
Somebody
like
paid it.
adjust your risk for that? How do you adjust like your stop loss or what kind of contracts are you taking? Like do you size down and then have like a wider stop or get like a smaller delta contract?
I play the same. My style will never change. My zones will never change. I will still buy and sell in my zones, and I will still buy 2 weeks out. The only difference now uh, with the ATR and understanding what volatility is, because we already went through the volatility when COVID happened. So now that I understand that, and now that I understand that giving it more leeway, it makes more sense. But it has to make sense according to the ATR now. It can't just be like, I'm gonna have this 5 minute chart with a little small breakout. Like I don't want to trade that because I understand that if I do, I might get stopped out real fast. And those who scalp, they're great at it. Like that's awesome. But for me, it doesn't work. I'd rather get grab the ATR movement, grab that support zone,
Play that
and my
juice.
sub play that. That's what you're playing, and that's the setups that I'm going to play. And I don't want to risk anymore. I'm not gonna swing. The only swing that I have are my leads, and that's
And a
it.
good area is to look from a technical standpoint for when volatility increases. A good thing to start looking at is those zones. And like just like in the BB system, when I'm trading the pre-market levels, I'm not trading shit in between the pre-market high and low unless I am just being stupidly aggressive, because the volatility always picks up when it breaks those levels, because there's a higher probability that I'm going a certain direction. So people are going to step in more. And also on a bigger time frame, like when you right now you're seeing all these sell-offs. These sell-offs are increasing volatility because it's a sell-off. Sell-offs always increase volatility. You'll always see a rise in volume. You'll see a rise in volatility every time you see a retracement. So it's a healthy thing to see when you see volatility increase as we're falling. That's normal for a bigger term outlook.
Yes, it is, and I like that.
Yeah, definitely, which is awesome for when you play your zones, because you're playing that volatility. When that juice picks up, you know that when you start playing that premium, it's going to start bouncing around a lot more than if it wasn't as, juiced up. Because
Oh
this is
yeah,
seriously the gas, and that's why I always tell people this is the fuel to the stock. If this is low, there's a lower chance of a bigger move happening. As soon as it increases, expect a bigger move. Like right here like I'm on Microsoft on the 30-minute, but even just right here, it increases, bigger move, increases, bigger move. It's
yeah,
way down here. We're just sitting in consolidation. It's just another
yeah.
good
Heck yeah,
technical indicator to look at.
yeah. And that's the ATR right there. That's a nice one. I like that.
Yeah, I always just teach my students ATR a lot, because I agree with you. Volatility is one of the greatest things to look at, especially in options
Yeah,
trading.
heck yeah. That's like the one thing you should be knowing. You gotta
Mm-hmm.
understand the characteristic of the stock. Otherwise, you're getting into something that you don't even understand, and then you're losing, and then you're asking yourself if you should cut loss or not. And
And
that's
then that's
not
when we get those
a good
fun
place to be
DMs
at.
like, "What should I do with my position?" Well, do you know what you're
Yeah,
trading? No. Do you know why you entered? I think it's gonna go up. Why are you? You should have a reason. That's why we teach all this stuff in chat. Because if you have a reason to enter, then at least when you go back to the drawing boards, you can blame your emotion if that's what the changing variable was. If you strayed away from the system, that would be what the problem was. But as long as you have the system in place, that's all you need to focus on. Just play the same setup every single day. And if you can't get it, then you don't need to force it. You don't need to chase it. That's what's going to hurt you.
exactly,
So understanding all these
exactly.
variables gives you a way better grip on whatever you're looking at too. But yeah, airlines, financials, these are all looking good for laggards right now, especially banks. I'm really bullish on banks with you for a long outlook, especially those
Yeah,
leaps.
yeah, for sure. And I think financials are gonna, I think after like honestly, once we find this bottom that we're gonna, be expecting after this week, that's when I think that the financials and the airlines are gonna start popping off a little more, because we need this pullback. We definitely need this pullback, especially from hitting that
Mm-hmm.
all-time high.
Because now when the tech goes from its newfound supports in the near future, that'll also have some gas to help the rest of the stocks pull up. Because I'm looking right here just at
Exactly.
XLF on the daily, and you can see when the ATR pulls up, when the big drop happened. You can see when it slightly pulls up on the June levels. It's starting to try and curl up again as we're approaching this newfound support, which you've been zoning out for like weeks now for people.
Yeah.
So people should have an understanding on why we're moving in such a wave in range. It's the zones playing.
Yeah. And that's all it is, and just like you said right now, that once tech finds its little bottom, and we start to base out, you're gonna find the same thing in all the laggers, because again, we're getting this news that's gonna bring a shift change in the stock market again, and it's gonna bring, about the vaccine. It's gonna, we're gonna open back up. They're gonna say, they're gonna leave some of those restrictions, in the COVID thing, and they're gonna be like, you can do this, you can do that. Well, as soon as all that starts happening, investors are going to start seeing that, and they're going to come into these laggers, and that's the way that they're going to get their foot in the door, catch the bottom, and to just ride that thing up, for a few more years.
Oh, I can't wait.
Yeah, I think
I'm so excited for the future of this stock market too, just because like I feel like a lot of people haven't appreciated. the market that's in front of us. Because you go talk to an older trader, and they will tell you straight up, this market is like no other. And so that's why we got to be appreciative of what's in front of us. Like seeing this kind of price action, it's the greatest teacher ever. We're learning so much so fast because of what's all going down. Like seeing a V recovery right after that crazy of a drop, that's never happened before. Then going to new all-time
Yeah,
highs that have never been seen, never happened before. We've never seen these levels before. We are the first to see this. So we got
yeah,
to be really appreciative of what's in front of us too. There's a lot of lessons to take away from this.
yeah. A lot of lessons, a lot of mistakes that we've made, um, and a lot of good ones too that we were able to have, especially in this market, man.
Hmm.
I think it's the greatest thing, man. And I look forward, to what the future holds, man. I look forward to, these new levels that we're gonna have. I look forward to, American lives, when it comes to the 401ks, hopefully, their 401ks recovered and some. So that I think that's pretty awesome that we have the opportunity at least to trade in the stock market.
And I only say that kind of stuff like being appreciative because like I really do feel like a lot of new traders, especially nowadays, get into this game and they beat themselves up after weeks or months. It's like, bro, calm down. This takes years to develop as a trader. Do not beat yourself up. But as long as you're taking away lessons and adding value to what you're learning here, that's all that matters for right now. It's not. You don't worry about getting rich right off the rip. As long as you're taking
Yeah,
away a lot of lessons and can actually consume and retain the information that you're picking up right in front of you, that's all that matters right now. Because it takes years. It
yeah,
doesn't just take months to be a trader.
yes, for sure.
But yeah, man, I remember getting those messages about the 401ks. I felt really bad for a lot of people. I had people messaging me too
Dude,
saying like, what should I do? Should I sell? Should I tell my parents to hold their stuff? And I ended up telling a lot of people just hold it. You never know what's going to happen. It's not like we're going to bleed to zero. The stock
yeah,
market's still going to
exactly.
run. There's still plenty of billions of dollars in this market. So, don't get out of your positions yet. And I'm glad if all those people held their positions because they would have ended up making a lot more than they thought they were down. So
Yeah.
I was glad
And
to see
and the
that
good
too.
thing is, yeah, the good thing is that we're day traders, and not just that, but the Feds already said that they're going to save the stock market.
Yeah.
And they're
So
not
why
lying.
go against why go against the Feds? Look what happened. They said they were going to save it, and look what happened. V-shaped recovery. It's that simple. I'm
and
not going
now
to go against the Feds.
and now they can take a big hit like we're seeing now. They can take big hits and still be above historical levels. Everyone's
Yeah.
still positive on the year, so no one's in freak out mode yet. So I really don't see this as a complete sell off or setting into FOMO or fear. But I do see this as a nice healthy pullback for a lot of things. I mean, there's a lot of reasons to be happy for the next couple months. There's so much news coming out for different stocks. It's gonna be awesome, especially
Hmm.
Tesla. Tesla's gonna have a crazy year, in my opinion.
Yeah, it is. Yeah. So yeah, like the way that I'm preparing for the rest of this week, the next 3 4 days, I want to see a pattern form. Okay, I know we're dropping. I know we're dropping on tech. I know we're dropping on. We dropped on BA today.
Hmm.
Some of their lines are holding. Some of the financials dropped today. Okay, now moving into the rest of this week, I'm gonna look for a pattern formation on any stock, whatever stock it is. I don't care if it's Tesla. I don't care if it's Snap. I don't care, if it's BAC. What I'm gonna look for is for a pattern to be formed at the bottom at support. Okay, whatever support is at, whether it's first support, second support, third support, whatever. If there's a pattern that forms down in the bottom, like a pennant, a triangle, a descending triangle, and it breaks to the upside, anything that breaks to the upside, that's when I'm gonna start taking my long positions and I'm gonna take my swings. Until then, I am not taking any swings. I'm not calling out any swings. I'm only posting day trading levels as for the rest of the week. That is it. That's my plan. That's how I'm going to be set up and take it day by day.
Sticking to the system, because why stray from it
That's
if
it.
it works?
That's it.
The craziest part too is I'll have so many people hit my DMs after finally like reading guide number 3 or just checking out anything we post in chat, and they'll be just be so surprised like, wow, this works even in this kind of market. Like, yeah, man, this works in every market. It's just price action. We play the price action. We're not relying on an indicator to tell us when to enter and exit. Now we do a lot of us do use indicators, but they're all a side confirmation. We're actually learning and
Hmm.
teaching the raw the raw meat of price action. You know, you're not having to get the in betweens. You're getting the raw meat right in the middle.
That was one of the things I wish somebody really like told me when I first started trading. 'Cause, you think when I heard like people say like, "Oh, you need to develop like a trading strategy," my thought was like, "Oh, I need like okay, if the stochastics crosses and then the EMA goes and then this indicator does this and this indicator does that, like that's a strategy." I never thought, okay, literally just look at what the price is doing. Nobody ever told me that. Like there are very few like traders in the market I feel like that preach just straight price action.
That's why I'm so glad Chef's here, dude, because now you're not just, which I already go over a lot of long-term stuff, but getting Chef's insight on it now, it's like an extra concept for people to pick up on for pure price action. Like, it's not so bad looking at it in a bigger picture form or in a smaller picture form. You should be able to trade. You should be able to day trade and play a Chef Zone by the end of learning from both of us. You should be able to play both short-term, near-term, long-term. You should be able to play it all by the time you're done just reading through the little bit of material we have. Which I say little
Yeah,
bit, but it's a shit
exactly.
ton.
It's a lot.
But
It's a
it's
lot.
but it's literally a scratch for what we'll probably have a year from now. So people need to jump on that now before they before we drop too much info.
Get caught up.
Yeah, getting where you fitted now, man.
Yeah.
Jeez. Um, um, but yeah, man. I mean, honestly, that's kind of my overview of the market, for today. Especially after seeing this red day. And I like what you're doing with your analysis right now.
Yeah, I've just been kind of
You
going
pretty
through a
much,
bunch of stuff. I did a couple alerts in the beginning, just off of stuff we were talking about, trying to keep it all organized while we talk, so it's not so hard to follow.
yeah, for sure. And
Which
that's
look at
what
that,
everybody else should do. There you
ATR
go.
flying up as Tesla's dying. That's healthy behavior.
Yeah,
That's cool to see though. You see this push up, then you get this long bull flag onto the 50% Fibonacci support, pushes right back up. And I think I talk about Fibonacci retracements in my first and second guide. I'm pretty sure I talk about it
yeah,
in both guides.
yeah, you do.
So there's definitely a lot to take away from this. Just these simple few tools. Like I like on my toolbar, I don't even the only indicator up here is middle VWAP, which I haven't even been using VWAP lately. Honestly, I just really like looking at volume and candles, man. It's just so easy to follow. The more you look at it, the better.
Yeah, for sure. And it comes with time, a lot of practice.
Oh,
Uh,
definitely.
yeah, everything is just with time, man. It took me a long time to figure out my strategy. It took me a long time to even be profitable. Took me a very long time. Took me some very very good lessons.
Yeah, I definitely took some stubborn losses just to learn my system, that's for sure.
Yeah, yeah,
Man, my Beyond trade was awesome though. I'm gonna go back and look at how it went now. I never even did a watch list review. I don't think I will, but man, everything that we called out in voice chat today, everything in the channels today was like literally 100% on point. There was like not a single play that people could have lost money on. Now there were a bunch of swings people had open that they probably lost on, but plays newly formed today from chat, amazing. I was actually proud of how everyone was doing.
yeah, for sure. Definitely a good day, man. Definitely a good day for some price action and some puts. That was fun.
Oh, I played right here, 27.
It's not often you hear Chef say he's taking a put.
No, it's not. Ugh.
It is a lot
I
harder for
had
me to
a
short than long.
I
Yeah,
agree.
I don't know, something about puts, man. Perspective, like I always say, it's how you view things, man. And the only puts that I like to play is BYND, first of all, because I don't like the meat. Okay, I think it's a disgrace to a real steak. Okay,
Keeping it real.
BA is one of the most shorted stocks, just like Tesla, even though Tesla's like booming. And then SPY, of course, it's just something where I can play a ODTE, and I never call those out because I do that on my own.
Yeah, same,
But
dude.
then,
Don't want to risk that.
Yeah,
yeah,
those
I
big
never
plays.
call ODTs. I don't. I will never give that to anybody.
Yeah, unless I'm in voice chat and you hear me saying it, that's the only time you're gonna hear me do it. You'll hear Devin do it every Monday, Wednesday, Friday.
Yeah,
So,
yeah. But these guys are great at what they do.
mhm.
And I'm not taking away from that.
Tons of
It's just
discipline.
Yeah, it's my perspective, it's my style. Um, and that's why. And another big reason for me is for the puts. I feel like I'm taking away from the American people, the 401ks and all that stuff, man. That's the only reason why I personally don't like to play puts.
Because puts were actually invented to be hedging against longs. They weren't actually meant at first to be made to make money off of it going down. Like that was the whole bias. The whole bias used to be just, oh, I need this to protect my
Yeah,
long-term
Yeah.
portfolio.
exactly. So I'm a bull, even on the red market.
Which I think a lot of people just need to look at it like this too. Like I was saying earlier on QQQ. I'm gonna go back to that chart and show. So I'm gonna clear my chart. The best line on here, the best two line. Let me draw three lines. Sorry, is you got your pre-COVID fall, you got your June levels, which that's about right here, and then you got your new high and you got your low, right? So now you have a grip around where price is. Price is right here. So I'm not going to be shorting until I get to the more negative side of this, where probability is higher that it will continue to fall, which is down here. I'm only going to long it up here and be certain of longing it after healthy pullbacks like we're getting right now for calls, because there's a higher probability of going up because you're in a newer
Right,
zone. When you get into the middle, that's when you get those zones and you get those consolidation periods where you were waiting for breakouts, where you need to be drawing common supports and common resistances. That's why we cover price action so much, is you get the highs, the lows, the gaps. They're just very common areas of high interest. And then we play probability. That's all this is. It's not gambling, it's not guessing. We're playing probability. And that's why having such good risk management plays into being such a profitable trader. You're not going to have good risk management if you aren't being consistent, and you aren't going to be consistent if you're just going out there gambling, which would be not following a system. So that's why following a
right,
system is just so damn important from the get-go, because if you don't even know where you're messing up, then you're never going to learn. So that's why finding such a reliable system and sticking to it is so good. It's productive, it's efficient. Helps you learn a lot
right.
about yourself too.
Yeah, I agree.
Kind of just looking at a bunch of bigger charts right now.
Yeah,
Just seeing some stuff. So yeah, I'm excited for financials and airlines, especially like we're talking, because especially the financials, just because they're lagging. And I like that a lot. Like C, I think C is the biggest gem out of them, because I was actually looking through them all. C is the farthest one from the June levels. So I think that one especially has room to go.
yeah,
I think the chart on C is probably one of the cleaner ones too.
Oh, definitely. Dude, as soon as I extended that break below line he said at 49s, I extend it to the
yeah.
left, it's that support. Like, that is just crazy. Like, you're not even looking over there yet. You're just looking at right here. Extending it to the left and seeing that it also lines up with previous history it makes it so much more stronger. And we're on the weekly time frame, so we're choosing the strongest levels you could almost possibly pick right here.
And I bet you that breakout comes when earnings are
Oh,
around.
bet. No,
Same with
definitely.
JPM. All banks, all banks on earnings season in October. You watch. You're gonna see those breakouts.
And then Chef's gonna be laughing saying, "I told you so."
Yes, I am.
I can't wait
I
for it.
don't I don't care if we go up or down. As long as we have those levels, we have those targets, we're good. Up or down, I don't care. I prefer up, but
Oh, I
wherever
need
we
to get
want to
into
go.
some financial leaps with you guys now. I'm glad we had this talk.
Yeah.
There's so many people that end up asking me questions about your zones too, and I'm so glad to help them because I understand them so well. I love seeing your channel, dude. I love going in there. I don't really check all the channels in chat, but I'd definitely go check yours
For sure.
because
It
it's
took me
cool.
a
It
while
lines
to
up.
understand it. The zones like honestly for like a while I was like, man, it looks like you're just drawing boxes in like the middle of the the chart, but like once you kind of understand, what a zone consists of, it kind of helped out um like my trading, understanding where the buyers and where the sellers are and just like how they react in those areas.
Oh yeah. It's kind of crazy.
Yeah,
So
and
I
and
always have people ask me like, does he mean to color them like that? And I'm like, I think he's just showing you there's different zones. It doesn't matter what the color is.
yeah, for me, the yellow one, it's always the major one that I always get in. So if I'm at the store and I get an alert on my yellow zone, I'm buying. I'm
Oh,
legitimately just buying.
I need
I
to put
see.
that in your the top of your channel.
I don't understand, like, I mean, I know like you color code them by importance, but I don't understand what makes the importance, I guess, yet.
A lot of it, the yellow ones are from the weeklies, the weekly time frame. So like if you look at my chart on BA, if you look at my chart on BYND that I posted, those are major areas, and those are the areas where exactly it bounced from. So see that one, that's the BYND that
Oh
you're
yeah,
looking
this
at.
is the 120s range. I know why you put this one. This is like the golden range of where it's never gonna fall through.
Yeah,
And that red range is
exactly,
so far where it's never gonna go above so far until it breaks it again.
exactly. So so again, like the structure was right there, right? So the yellow was your weekly, so you know that there's buyers. The blue one was literally just so everybody can just get in. The green one was your start to scale out. The red one was that you better know that that's
You
resistance and
better
you better
take
not be in any
profit.
position.
Take your money and
Yeah.
run.
See, I'm
You
glad that you explained it like that because that's how I actually thought you were doing it. I was like, I'm pretty sure he's just doing it by area of importance. Like, this would be your, I'm definitely buying calls. This would be your, I'm probably buying puts or taking profits on my calls. This would be your taking profits, scaling out, because scaling out is amazing. That's actually what a lot of people are going to end up doing as they grow as a trader because you'll end up buying more contracts and you don't just buy in, sell, or sell. You get in, you scale out half of it, you play with the table's money, you're not risking all of your money anymore, and then you have a higher chance of making even more money while not risking any of yours. So you have low risk, high reward. So that's what I thought.
yeah.
That's good.
Yeah, and that's exactly, how you play that, especially if you're trailing. So that green zone, that's where you take profit. If you're going to like try to swing this, make sure it doesn't go below that green zone. And you just play that way. And even if you look at the BA chart exactly played out the way that I charted it before it even happened. Just like that. And look, you see that bottom of the bottom red line and the blue line. Now
Mhm.
go look at a regular BA chart on the 15-minute and go look where it's at. You'll see that it played out just like that today.
15-minute. Oh,
All the
it's 10
all
minute.
the way at the end of the day,
Yep.
when it broke the pattern, you had the opportunity to grab a put, and that's where we ended up closing. So if you look at BA 15-minute chart, it's literally gonna match that exact
So
pattern
clean.
right there.
See, that's the reason too why I get mad at myself for trading so much in the morning and then I'm out of buying power by the time like these kind of patterns start playing out.
Yeah, you
Like,
got being more patient will I always that's why I always say the patient play pays because if you be patient with your cash position, I almost promise you, if you do that every single day of the week, you will find way prettier setups that are a lot easier to you as you approach them because you're used to seeing these good setups. So a lot of the
yeah,
aggressive money, a lot of the quicker money happens in the morning. That's why you always hear me say don't trade the first 10 to 30 minutes if you are not, comfortable with how you trade the system yet. Because a lot of the good trades do happen right after the first 10 minutes. But then a lot of the easier one directional plays happen on those 80% plays, like right here. It happened later in the day. That's
Yeah,
over an hour later. So a lot of people were done trading by then. But that's where the better one directional play came from for the rest of the
and then there's Devin who's done in the first 2 minutes.
day.
yeah.
I try showing people how he does it because I've been trading with Devin for so long. I can go to a chart and I can tell you exactly what he did when he did it, just because I know how he trades. You go look and you got to see when the bid was smacked. He doesn't get in like on this BA play. I promise you, if he would have been looking at BA, he would have shorted it right here at the second 1 minute candle at 8:31, just because this is probably when the bid got flushed. Seeing the bid drop over 50 cents or a dollar on a stock like BA is beautiful. And then having rising seller volume also pick up is another good indicator for him. So 1 to 5 minutes in that trade, bro, weighing in too. So like in the beginning, he was using just one contract, two contracts, and he was making the same percentages as he does now. The only variable that changes is how much cash he's using because you only make as much as you risk, right? So now he's risking a lot more and he's making a lot more, but he's doing the exact same thing, changing nothing. He's following the same system that we preach in chat, and he's
I
so
don't know.
damn disciplined that it pays him.
That's crazy.
It's discipline that pays.
So he plays based off like watching level 2 and watching like just kind of for that flush move, and then once you
Hmm.
see that flush move, that's when you get in.
And you know what he's watching? He's watching those pre-market highs and lows. He's not watching
Yeah.
shit that happened 3 days ago. He's watching something that's right there in front of him right there. And if it doesn't look good, it doesn't have a good tight channel like this pre-market does in BA, he's not playing it. If it's ugly, move on. There's 100 other stocks you can go look at. And that's just
Yeah.
how disciplined he is. Like, shout out to Devin, because a lot of people think he's been trading for a very long time. Devin's only been around for a little over a year, but he's so damn disciplined is why he's so successful at what he does. He's seriously
Yeah,
the best scalper that's ever touched this chat, in my opinion. Damn,
and
I
I
didn't
will
see we were
not.
running almost 56 minutes.
Yeah. I was like, well, I tried to message you, bro.
That's how you know it's a good stream, though.
Yeah, you're just gonna go on. Let it go. Let it go.
I was the one telling Chef we can't go over an hour, and here we are running to an hour.
Yeah, but we can always structure some more videos together like this, and
Oh,
maybe
definitely.
break down a few or two
Bro, I think
tickers or
I
something.
think we should do this every single first day of the week because that's when a lot of indecisiveness is in the chat as well as the market. So I think if we
Hmm.
touch this every, whatever the first day of the week is, this week it's Tuesday, but normally it's a Monday. I think we should do a stock talk every Monday market close if y'all want, and then we can come up for other ideas for other stuff because we already have you and me streaming a bunch during the week. So I don't want to overwhelm
Yeah,
everyone just yet, but I definitely like this stream because it gets people to get a new grip on what's happening with the market since Mondays are always the craziest. Just like today, Tuesday was the craziest.
yeah. No, I agree. I'm 100% down for that, especially because if anybody doesn't know, on Saturday is my last day of my actual full-time job,
Hell
and I'm gonna be a
yes.
full-time trader. So I'm gonna be here a lot more. Expect me a lot. That's the awesome part.
Oh, it's gonna be so
So
much fun.
I'm down for every Monday. Market closing.
Oh, bro, voice
The
chat's
time
about
is
to be
set.
super hyped.
So let's do it.
We'll get it popping.
And after Chef's done with his first series of one-on-ones, we're probably gonna end up doing a big mentorship group as like a group, really, like I just said, where me and Chef will take like 10 people, maybe a little more. I don't know. We haven't really decided yet, but we'll take a big group for super super cheap, and we're just gonna go over literally everything. Everything that
Yeah,
we think you should know. Price action,
Be great.
contracts, what to look at, all the basics, any of the in between. We're gonna cover every damn bit of it.
yeah, for sure.
And I think on some of these stock talks we can feature other people too. Like we're always gonna have you and Nick and me, but we can always invite like a random person like Leo or Devin or John or just someone from chat. We can always invite someone and just have an extra mouth those days just to make it a little spiced up a little,
Yeah, heck yeah, man.
like Chef does
Sounds
with
like
the
fun, man.
spice hand.
Stir the pot.
Yeah, for sure.
But yeah, if there's anyone in here, by the way, watching, um, DM me and I'll actually send you the premium access playlist. If you've actually stuck it out this long, I will give you the premium access private playlist for free. Just DM me. Shout out to you for staying
Cool.
this long. I think we're gonna wrap it up though.
Right.
We were aiming for 40 minutes to an
Yeah, for
hour, so
sure.
this is perfect. So I'm gonna go ahead and end the stream here. If you
Cool,
guys
man.
stuck it out with this time, shout out to you.
Yeah, thank you for stopping by.
But yeah, I'm gonna end it
Uh,
right here. Bye
cool,
everybody.
brother. I'll catch you guys, man. Thank you so much.
Damn, bro.